specifically this. So we got a two condition set up, and we'll see which one we come into first. But that's kind of what we're looking for. We're either looking for a market structure break on the H4, H1 to the downside with some sell the rally signals on the 3-minute and the 5-minute, or a retest into the H4 breaker inside the fair value gap, and then we reclaim the H12 swing low. And specifically, the H12 swing low, if I can zoom in, is this line here. And we're looking for a pattern to where we peak above, we come into this H4 breaker, market structure break, come back below, and that's the reclaim. This is the retest, and this is the reclaim. If we come back below, and then this holds, or shorten, and then into the new year. Well, who knows? Maybe we fill the whole fair value gap. But I would like to think maybe it's not that simple. I don't know. We'll see. Yeah, I don't know. So moving forward, we have a setup. If we look at some external kind of unique things like the oscillators, the biggest thing is the weekly divergence, bearish divergence, and 50 is the line in the sand. If we hold at 50 and we do not go higher, it's more likely it's going to reverse to the downside. One thing would be cool is to set an alert for the 50 mark here on the RSI, on the weekly, if we're getting close to crossing it. I mean, 49.79 works for me, and then we'll lock it and send an alert that we're crossing RSI line on 50. Wow, this has got a lot. There we go. So that's the only thing. The RSI thing here on here doesn't do like a super good job, but as far as the weekly, I like, as long as like it's lagging, you know. But for the most part, you can get a general idea of like, okay, it's confirming kind of what we're thinking. And then as far as like attaching the H4 breaker and the fair value gap with a pitchfork to see from the swing low to the swing high and the middle line at another swing high, just kind of where we might expect a rejection. And it looks like somewhere around here. I mean, according to this H4 chart on the right, it looks like we could reject off of here or around this level here. I almost like it better on the H4 than the H12. I mean, if we remove it and keep it here, this 0.382 line looks very ideal to where it could have a rounding top here and then get rejected and then come underneath, hit this 0.382 and the reclaim down to the downside, reclaim this line here and the H12 swing low, specifically right here. And that be it. So one thing we could do is we have a black line here in place. We unlock it and we move it. We move the line to this one a little bit before, so then we can get an idea of when we're getting close to touching that line. And then we will mark it as pitchfork 0.382 level. Boom. Yep. So then that's like another part of the setup. I mean, if we really wanted to jump in risky, this is the part on the retest, a deep retest into the 0.382 level. Possible first entry. Boom. And then as far as everything else, I don't know. Like we're kind of playing it by ear because there hasn't really been any new trend lines or just ranges that we can look at that would help us a lot in just discerning where things will end up. Period. Where it'll stop and end up. One thing we want to try and test out is maybe grab this, put it here. So here we could see this fib does really well with the fake out and just holding against this H4 breaker. So this fib might be useful to us for the range it gave. It would be nice if we got a new high range that we could use, but that's just not in the cards. Not in the cards. And that happens to be the previous week high. So ultimately we want to see it peak above the previous week high and come back down. That's the ultimate goal, and we expect this H4 Momo to be overbought, and I think that's kind of on the alerts that we got. So if we were to take a look here, we want to clear the log for the week, and then we want to find like a Momo. Let's clear all the ones that have been stopped. Oh. Okay, and then we're looking for sell the rally. So we got one on the H8, or we want one that says sell, I think. We don't have any Momo alerts, so we'll set one. Double sell, that's what we're looking for. H4 Momo double sell, or sell. There we go. That's the main one we're looking for, is this one. And then we need to make sure the sell the rally for the 3-minute and the 5-minute are available. They are not. So let's go ahead and set it on the trail. We're going to set the sell the rally first. Make sure these are in. And we got the H1s in there. I think we're set. So we're waiting for some kind of move higher, so then the institutions can go short, and we're looking for a possible retest in the H4 breaker to where it rejects and creates a swing failure pattern, reclaims its H12 swing low, and we build a position on the way down. And that's the trade plan for Tuesday if it were to occur in a really fast manner. I don't expect it to occur fast. In fact, this is pretty much for the whole week instead of it being for the day. I think it's for the whole week. But if we do get to a point where we it happens in one day and then we get a high ADR, that's something we're going to use to our advantage on the short. Is we get extended on the ADR, we fill the fair value gap, or we hit the first high ADR and we reject, and that happening in the single day, and then we close on the year lower. That to me makes the most sense, where we close on the year lower, just because if we were to just apply last year's high and low and last quarter high and low, and we were to just remove this. So last quarter high and low, last year high and low, if we wanted to see a breakout to the downside, we would see it close a little lower than that. So the idea is that maybe that happens still, and that this week we get a lot of volatility, and we end up closing the year pretty low, and that ends up being the left shoulder reclaim to where price can come back. And I don't know, I'm suspecting either we close right below the 0.382 on the year in the 6 month and the quarter, or we close below, I don't know, the 0.5 level, and to head towards the 0.618 on the fib that's taking place between the COVID nuke low and the all-time high with the fib. So I don't know. I'm thinking this close on the year and the quarter, we'll start to see revealing data just to where exactly it will close on the year in the 6 month. But I think that's going to anchor us on just kind of what to expect for next year. I almost think this has to move fast in order for us to purge liquidity to the downside. So that's pretty much the trade plan for the day and the week. There's not a whole lot I need to add. Not a whole lot of homework I need to do. Very simple, and we're gonna figure out just kind of which one of these, if the cycle theory is something we should pay attention to, if the institutions, if it's something we should pay attention to, or do we just trade the market structure breaks and just trade kind of what we see and what we could anticipate for a downside. Maybe that's the wrong move. I don't know. But using just kind of all these atypical things, whether it's the pitchfork or the fibs from the swing high, swing low, or the oscillators, or the H4 breaker retest, we are trying to find just kind of some probability where, okay, that's the possible top. And the best case scenario we got is this H4 breaker, that it gets rejected, the bear step in place, and this becomes the swing left shoulder, and then H12 swing low gets a reclaim to the downside for a swing failure, a bear swing failure pattern, left head and shoulders, and then starts dumping near the end of the year, and fill the gap. So that gap, I bet, is going to be in contention for the rest of this week until the end of the year, or until it gets filled. And who knows if that's in place so that next year it gets filled. But it's definitely left there intentionally so that we have to revisit where we are now. But it also makes it very appealing to want to short. And I wonder if they're going to make it hard to short. It's something that if I were to consider that maybe if nothing sticks, to just wait until H4 and H1 breaks to the downside before getting into a short. And that's quite possible too. And we have to kind of play it by ear, tiptoe into it, and then if it sticks, then we can start chasing after it a little bit more or increasing the risk. But I think that's it for the trade plan.